involved in public accommodation PPPs, such as some of the government departmental buildings, and then also in multiple rounds of the renewable energy project. So it's the largest investor in REAP projects, for instance. And these have largely been successful, and I think it's kind of a testament to the partnership that government and the private sector represented through funds such as ours have achieved. More recently, we've been growing into, let's call it, more private infrastructure spaces. So we are involved in digital infrastructure, and through our platforms, I think compared to the likes of CIVH, Massive, and Telkom's OpenServe, we're the third largest player in the fiber to the home and fiber to the office market. We're involved in cold storage, where we've established a platform mainly looking at providing food security in the region, and also involved in bulk freight and port logistics through at least 2 platforms that we're involved in. Another play that's kind of been a space we've played an increasing role in recent times has been in the commercial and industrial power space, where I think we are currently looking at a pipeline of between 1.5 and 2 gigs of power on a bilateral and on a many-to-many basis in the commercial and industrial power space. Again, testament to the government's liberalization and allowing the private sector to play a more meaningful role in generation. The other spaces we're looking at include grid flexibility and transmission infrastructure, so looking to play a role when that comes to market. We're involved in the commercial reuse water space at the moment through a partnership we have with the international player Suez. And we think that that's a conduit we can use for involvement in the broader water space in South Africa as well. So yeah, I think quite a few projects across multiple sectors that we're looking at in South Africa. And maybe it's worth mentioning as well that we're also a continental player. So in addition to the Ideas Fund, which invests predominantly in South Africa, we've got a Pan-African fund that invests dollar capital into projects across the continent, obviously seeking dollar returns. So the nature of the projects it supports are slightly different, and we managed to close that fund at circa $750 million towards the end of last year, together with about $200 million of co-investments. And this funding is largely from sovereign wealth funds, development finance institutions, and I think gladly also a large amount of commercial money into the space as well, which is something we've historically struggled to get. So in terms of broad interest in the Pan-African infrastructure space, I think if you've got a clear thesis on what you're investing in, and it's clear to investors what the economic benefits will be, then you do get traction.
Thanks for your. I'm going to put you on the spot now a bit, because the Deputy Minister cannot speak sovereigns apart from South Africa. And obviously you got extensive experience in...
Unless I cause it.
We don't want you to do that. So with your extensive experience, across the continent, perhaps you don't have to specifically name, certain projects, but just give us a bit of a snippet of some of what works, so the good, the bad, the ugly, in terms of regulatory issues. Have they improved? Has the PPP framework become a lot more robust? Pension fund reform to boost domestic savings? I don't know what you're thinking.
Yeah, I think that the key thing is that Africa is not a monolith, right? It's lots of different economies with lots of different regulations, with governments in differing kind of fiscal positions. Yes, there are broader themes that apply across the continent, but I think, and maybe let me do it by juxtaposing some parts of the continent versus what South Africa has done. So I think the beauty of the South African market that's allowed us to build the level of portfolio that we've built over the years has obviously, in the first instance, been underpinned by a deep capital market, a very big pension savings market where there's capital available to invest in the private markets. And obviously in South Africa there's been the recent Regulation 28 amendment which has allowed increased allocation for pension funds to private markets, either private equity or private debt. We're yet to see a big big allocation change, but I think this will come over time. I think pension funds are currently involved in trying to fill their offshore allocation budgets. The Regulation 28 change has also allowed more offshore allocations, but I do think over time the allocation towards kind of productive private capital will increase. But moving on to South Africa and the policy landscape, I think maybe just using the REAP process as a case study, where South Africa essentially kind of set up a process that was multiple round and scaled, right? So I think it's very important, scale is very important. Scale allows big businesses internationally to kind of, it props their ears up, and they then believe that there's a viable market of scale that they can participate in a country. And then further to that, the fact that there's repeatability, multiple rounds, means that kind of entities such as ourselves and other international players are then able to establish businesses to pursue the opportunities in country. Because if you don't win in the first round, you might win in the second round or third round. So there's kind of limited risk to establishing businesses, whereas in a one-shot process, one is not really going to establish a platform to pursue the opportunities because of the risk involved. And I think that's really been the benefit of the South African market, has been the multiple round programmatic nature of the infrastructure assets it's put out. Of course, we do complain about the pace at which projects are being released, and we think that that could happen with more regularity and with deeper scale. But by and large, I think the partnership with the South African government in getting projects off the ground has been great. In other instances, we also believe that it doesn't necessarily mean that government should be the procurer. You can have instances where government just loosens the regulatory bounds, such as with the commercial and industrial power market, where essentially government's not procuring the power, but the private sector is procuring on its own on a normal self-provision basis. And what's then happened is, because of access to grid, etc., the private sector has essentially additional generation to go on grid, and the benefit is almost an externality from that private contracting, is that you have more power on the grid. So I think the rest of the continent in some ways, and this is, again, Africa is not a monolith. There are certain markets where we as a business will continue to contract on a government-backed project basis, the likes of Cote d'Ivoire, Kenya, for instance, where there's still a level of policy coherence with private sector participation in the infrastructure space. There are, of course, markets where we've experienced big setbacks. You mentioned the power project we did in Mali. Obviously, with the recent geopolitics, the coups, government's kind of ability or motivation to abide by the contracts it signed has been limited. Similarly, in markets such as Ghana, we've seen government reneging to the detriment of the private sector on some of its obligations around the power market. And what that means is when you come up with a power process now or next year, the private sector is not going to be there, because there's no trust and credibility built. So I think the importance of building trust and credibility over time is what really can help in driving the private sector's participation. I think that's a kind of a short snippet. Is there are lots of markets on the continent where we will not do government-backed deals because government doesn't abide by the contracts it's signed, but nonetheless we still move forward on a private sector basis. So the way we see it is that the infrastructure development market in some of these markets is more commercial and industrial play, and the benefit to communities will arise almost as an externality to that private contracting, which is almost on a self-provision basis.
Well, thanks for you. And as you say, a credibility deficit can become quite scarring perpetually and needs to be addressed for private investment to continue flowing. Deputy Minister, let me bring you back. You initially mentioned the continent's free trade agreement, and clearly there's been a concern that there hasn't been enough infrastructure connectivity to get that off the ground, in addition to the existing non-tariff barriers, for example. But as a public finance management expert and the role that you've had over the years, do you see a correlation between investment in infrastructure and a benefit to broader society? And the reason we ask that is there has been, general concern that there's been overspending on, projects that could be perceived to be white elephants.
Yeah, I think firstly, we all know the funding gap. The numbers that are being thrown around, it's around 130 billion to 170 billion US dollars in terms of the annually for infrastructure financing gap. And the problem is not money. Notwithstanding, here in South Africa, our savings rates are very low, but the problem it's not money. The first issue is, if I can ask, we know the funding gap, but if you go around and say, show me the projects, very few projects will be put on the table. So I do think that the working on the bankable projects, it's quite important. South Africa, we are drawing from the RIP program, helping departments to put together bankable projects, so that when you go around and say, please invest in infrastructure, yeah, it's a bankable project, it makes commercial sense, the returns are good, you guys who do capital budgeting, you do your cash flow, you see where the money will come from to make sure that returns are realized. So that's the first thing, that we really have to work on the bankable projects for the continent, and not just country-specific projects. I think we need to think about cross-border infrastructure. The Libido corridor is just one example. If you are to capitalize on this African continental free trade, you really need cross-border infrastructure. And if you are to attract big money, great money, not only from each sovereign, but from outside. People are looking for big tickets. They are looking for scale. If you're going to still be working on projects, that's okay, but we also have to think about continentally, regionally, how we get private capital to move in there. But for that to happen, the incentives and the financial structures need to make sense. I mean, there's no doubt to your question about the importance of the infrastructure. If you are to be competitive as a continent, your cost of doing business have to be lower. If your infrastructure is competitive, if your freight logistics work, you're able to take things from here to the rest of the world and things within the continent, clearly your competitiveness will be increased. But that infrastructure must be affordable to the users. The tariffs I know industry has been complaining and keeps on complaining. about the tariffs of Transnet, but we are at a point where you have to build the capacity of Transnet to even take goods from outside, and that's for that reason that we said, look, let's put the right financial structures to enable private capital to move into those structures. And Nwako is here from the Department of to allow third-party access to rail, but the rail infrastructure itself requires a lot of revamping, and we're also calling the private money to get in there. But like I said, the incentives, the structures have to make a lot of sense. As National Treasury, we also said to sort out the metro's infrastructure, the trading entities, they've got to be separated out of the municipality so that they can produce their own financial statement. They can go out in the market and raise money in order to boost our own infrastructure, because cities are critical for economic growth. So for me, to sum it up without getting into a whole range of reforms that we've undertaken in enabling the private sector to get into the infrastructure, the key thing for me is the right structures and the right incentive. Money is not a problem. It's what are the conditions that you're setting in place to enable the investors to generate better returns.
That's David Masondo there speaking at the African Markets Conference 2025. It's actually day 2 of this event currently underway in Stellenbosch. He is participating, the Deputy Minister there, in a panel discussion alongside Vuyo Ntoi. He's with African Infrastructure Investment Managers. The idea here really is speaking about African markets and ways in which, to put it in layman's terms, economies can generate growth and ultimately improve the lived experience of ordinary Africans. We've heard there, the Deputy Minister, for example, mentioning that money on the African continent is not a problem. The issue is about creating bankable projects that can attract investment. And that's something I think that will resonate with many entrepreneurs who believe in the really deep potential of this continent, especially when you consider its very youthful population and how many people are looking increasingly to Africa in order to grow in the future. We've also heard there, of course, of the African Continental Free Trade Area, which was meant to be a mechanism through which economies on the continent will be able to trade amongst each other, as opposed to looking, for example, to the global north. For South Africa is a case in point insofar as that is concerned. Our biggest trading partners are not in Africa, but in fact are in Europe, with the European Union, in China, and of course in the United States. So we'll continue listening into that incredibly important gathering.